In this video, I'm going to be going over exactly why so many Forex traders out there lose money. I've just Googled a bunch of brokers right now. eToro came up as an ad. 75% of retail traders lose money. FX Pro, 81% of retail traders lose money. Plus 500, 76.4% of traders lose money. I'm going to go over the top 10 reasons why traders lose money in this video and ways in which you can prevent yourself from falling down the same path and actually improving your trading journey and becoming profitable. I'll see you in the video. So what are the 10 reasons that Forex traders lose money? Well, I've listed them out right here, right at the start of the video, so you know exactly what 10 things to avoid when you start trading Forex. So first of all, poor risk management. Second, not accepting you're responsible for your losses or any of your mistakes. Third, you're over trading, you're trading in and out too much. Fourth, you're risking too much. Maybe you're going all in, maybe you're not. 5, you don't have a trading strategy. 6, you're setting yourself unrealistic expectations. 7, you're indecisive when trading. 8, you're never wrong. 9, you don't have enough money to trade with. And 10, you're only focusing on technical analysis. So let's go and do a deep dive into all these reasons why Forex traders lose and actually see how you can prevent yourself from doing it and actually how to improve your own trading overall. So number 1, poor risk management. Well, what is it? Well, when people think of trading, they actually think of it as gambling, don't you? If you've ever told someone that you're going to start trading, they'll be like, oh, it's gambling, don't do it, it's too risky. Well, it's not when you do it properly. But when you've got no risk management and you're gambling all your money away in one trade, then obviously people are going to say it's gambling because it is. But in reality, people just aren't following any simple risk management rules. Something as simple as setting stop losses or setting take profit targets so that you're limiting your downside risk and you never lose more than what you're willing to risk. There's a lot more to risk management. It goes into a bit of an advancement. It's a bit too much for this video, but we do cover it in the academy, and risk management is probably a core reason why Forex traders lose. So when you start off trading, don't follow any videos out there that are not setting stop losses or anything like that, because it's just ridiculous. You need to set stop losses and you need to set stop targets, because if not, you're definitely going to get burnt, and you might get burnt more than you are expecting. So the second reason Forex traders lose is because they fail to identify their mistakes, don't they? Everyone likes to put the blame on something else. You know, let's take an example. They want to be fit and healthy. What do they say? I don't have time to go to the gym. I don't have time to cook healthy food. I don't like healthy food. I need to get a personal trainer. They like to put the blame on everything else, when in reality, what most traders are failing to do is they accept they're actually making mistakes in the first place. You'll hear things like, oh, it's the broker's fault. Oh, it's the market maker's fault that I've lost this trade. Or the news just came out and I've lost this trade. That's absolutely wrong. You have full control over what you do and what you trade. And you need to get over those psychological biases that happen in your head and actually start getting into a good habit of blaming yourself for the trading decisions that you're making. Because once you start putting the blame on yourself, you can actually start your self-improvement and self-development of becoming a better trader. But before then, you'll always be blinded by the fact that you like to put the blame on something else. And it's something that traders always overlook. So what about the next one? The next reason is overtrading. Now, this is a really, really common mistake, especially after a trader has just won a trade or lost a trade. After they've just won a trade, they're really happy, they want to place another one. When they've lost a trade, they're really sad, they're really angry, and they want to make back the loss that they've just incurred. Actually, traders who are constantly getting in and out of the markets don't necessarily lose from the price movements, but they definitely lose money from spreads and commissions, because every time you trade, you need to pay a spread and commission. Now, one rule to take into account is that you don't need to make lots and lots of winning trades. You just need to make a few correct trades that win big. And that's what I'm really advocate of. You really don't need to be placing loads of trades. Here at Logikfx, we're only placing anywhere between 1 to 6 trades per month, whatever the market is making available to us. And it's the main reason why you need that proper systematic strategy going ahead, like the one we have here at Logikfx. So if you are interested in learning a systematic strategy, go ahead and click that link in the description. We have an online web class that we've pre-recorded from one of our other webinars, and you can give that a watch. It'll teach you exactly the fundamentals that we use when trading. So what's the next reason that traders lose when they start trading Forex? Well, the next reason is that they actually risk too much when they trade. And one of the funniest things I've been told from a trader when I first spoke to him, he was, I risk 100% of my trading capital in each trade. And they called this trading. No, I'm sorry, mate, but I'm really sorry to burst your bubble. What you are doing is gambling. And you'll even see people online that literally risk 100%. You wouldn't do it. Why not just go to the casino and put 100% on the black? Professional traders only risk a certain percent of their overall trading capital at one time. Okay? A lot of traders will risk big after they've lost to try win back what they've lost. So just remember, don't risk ridiculous amounts. Set out proper risk principles based on how much you want to expose yourself to and how much money you're actually starting out with, okay? The next reason, no one gets into trading. Well, most traders don't get into trading with a trading strategy or a plan. And everyone that trades needs a strategy, and they need to do it consistently. If you don't have a strategy, you shouldn't be trading at all. Just put it all on black and casino, like I just said. If you want to start trading and you don't want to actually get in with a strategy or a plan, there's no point. You might as well go to the casino and just gamble it away. That's why at Logikfx we always give our strategy away to our traders so they can master it, be dedicated towards it, and actually be consistent, because your success is literally measured on how consistent you are with the strategy you employ and actually applying the knowledge that you come up with. Don't be a losing trader that comes in with no plan and just wings it. Yeah, you'll just wing it and be like, yeah, I'm fine, I'll just go ahead and do whatever I want. You might win a few, but over the long run, you're really not going to win, and you'll definitely be a loser. So the next reason why Forex traders lose is they set themselves unrealistic expectations. And I have to stress this so many times in trading and in Forex. It's not a get rich quick scheme. And sorry to burst your bubble out there if you think you can come in and get a quick profit from the markets. I hear people out there on the internet, even in person, saying, I want to make £5,000 a month or $5,000 a month trading Forex. You can't create expectations like this, because number one, the market determines how much money you lose or make at any given time. And number two, when you don't reach those expectations, it's going to cause you to make really bad trading decisions and even maybe lose confidence in your trading. That's the main thing, losing confidence. What you really need to be doing is setting yourself realistic expectations of anywhere between up to 50% per year. And that's something that you can actually set a goal as, because that's what most funds aim towards too. So the next reason, indecisive trading. This is a mixture of, not having a proper trading strategy or confidence when you start off. And what I tend to see in traders is they're either too scared to get into a trade, or they're too late to get out of a trade. So they'll be dilly-dallying, before a trade. They don't know whether to enter. And actually when they're in one and they're losing, they kind of wait for it to try and get back up to where they entered. But that's really the wrong way to go about it. They'll be in and out of trades all the time, because the way the chart moves is actually affecting how they're trading. And what you need to know is you really don't want to be second guessing yourself. If you've done the analysis, stick with it and embrace the risk. If you're losing money and it's affecting your lifestyle or it's affecting your mental health and you're getting anxiety from trading, take a break. Stop trading. It's really that simple. But if you've done your plan, you've done your strategy, and you've now done all your analysis, you can be confident and be consistent in that strategy. If you haven't, then it just makes sense that you're indecisive, okay? So the next reason for Forex traders losing money in the markets is because they never think they're wrong. And when you're trading, you can't be 100% that your trades are right all the time. It's really not realistic. More often than not, I see traders come in, they're so certain that trades are going to go a certain way, they'll risk it big, and boom, what happens is they lose, they get upset, they start falling for the other 10 reasons I've just mentioned. They blame the news, they blame the markets. You have to accept in trading that you can be wrong and that trades can fail. It's part of the game. As long as you're gaining more than your losers, you'll be fine in the long run. So you have to make sure your risk reward ratios are in a profitable region, and actually that you're gaining much more on your winners than you're losing on your losers. Now, we're on our 9th reason now, and that is they don't have enough, like traders don't have enough money. They don't have enough starting capital because they're in it for the quick profits. Many people jump into Forex thinking it's a place where they can get in the markets, get in it, get out, and make a quick £100 a week or something. It doesn't work like that, and it doesn't help as well that all the YouTube videos out there, the marketing, they all promise you all these ridiculous dreams of making £1,000 a week, quitting your job, and even brokers have it as well. So although brokers do have minimum requirements, so let's say you could trade with £100, you won't be able to trade properly due to those limitations in capital, and it forces you to then leverage. And what then happens is you're paying more commission, you're paying more spread because you've had to leverage more, and you're more likely to go bust as well. You're more likely to not be able to continue trading. So in reality, it's not the case. You actually do need more money to start trading. And if you're not already earning money, then it's going to be a path for disaster. Okay? If you're not earning money, don't even think about trading. Get yourself a job. Get out there. Start working. Okay? Trading is for those that already have a solid income or already have an income, and all they're doing is looking to grow part of that income. Okay? It's not an income source in itself. It's somewhere to actually grow money. Now, the final and probably one of the most important reasons why existing traders fail is because they only use technical analysis. Okay, it's probably one of the most important reasons. And this is things like understanding price patterns, how to use indicators, and traders call this technical analysis. Okay, the reality is technical analysis is only useful for a few things. This can be like timing trades, identifying a trend. It's not good for determining the direction of future price. Okay, that's where fundamentals come in. The fundamentals, they give you a good idea overall which way the market will go in the future based on actual economics. And then you use the technicals to time your trades. But online, it's literally advertised as if technicals is going to be your dream thing to start making money in the markets. It's really not. You need to start using both types of analysis out there to actually have an edge in the markets and beat the rest of the traders, beat those losers, because you don't want to be a part of those 80-90% of losing traders out there. And that's why I've made this video, so you can literally go over the 10 reasons why traders lose and prevent yourself from falling down these same steps. Now, if you're really interested in getting into trading yourself, or maybe you've already had some experience, we've got an online web class. There'll be a link in the description on actually teaching you part of our fundamental strategy, a part of risk management and psychology on what to do when you're actually starting off trading. And it's actually quite an advanced strategy, so make sure you have a couple hours out there to sit down, make some notes. If you're interested in that, sign up in the link in the description. If not, thank you so much for watching this video. It's Matty from Logikfx. Do make sure to subscribe and comment anything you want below. I'll see you in the next one.